Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets, and more specifically, we're going to be asking ourselves the question that I'm sure is on all of your minds right now. When is this low volatility that Bitcoin has been experiencing here for the last 45 days or so going to come to an end? Because I don't know about you guys, but I've been in the market for quite some time, and I don't believe I've ever seen the market see this low volatility. I've seen very low volatile periods. For example, last October didn't see a lot of price movement. We saw Bitcoin basically trade sideways there, but that was in the middle of a very, very bullish, high volatility uptrend. If you look over here on the right of your screen, you can see that this number right here, the one that says negative 0.01, that is the amount that Bitcoin has moved over the last 24 hours. Over the last 24 hours, Bitcoin is down by exactly 1 penny. Now that's probably about to jump up. It's been hovering around almost exactly $6,266, just like I said here over the last 24 hours. But if we zoom in here to the hour chart, of course, we've seen a little bit of fluctuation. But currently, Bitcoin is trading at exactly the same price as it was literally 24 hours ago. It's not up 0.01%. It's not down 0.10%. And this kind of characterizes the market that we've been in for the last several weeks. So in this video, like I said, we're going to be discussing when this is going to end, when it's going to end, and how it's going to end later on this year or early on into the year of 2019. So without much further ado, let's go ahead and get right into it. Like I said, Bitcoin is currently trading at around $6,266, or in fact, when I'm recording this, at exactly $6,266. Excuse me, $6,266. This has been jumping around for the last hour or so. It's been trading almost exactly there. Apparently, we have a very high buy wall and a very high sell wall at exactly $6,266 on Coinbase. So let's go ahead and do the crypto market recap, and then we'll go ahead and get back on to the main part of the technical analysis and the main topic of today's video. If we sort by change, not sort by change over the last 24 hours, if we look at Bitcoin's average price across all exchanges, Bitcoin is currently trading at around $6,333. Now, of course, that's taking into consideration the Bitfinex chart and all these other charts that see Bitcoin trading a little bit higher than it is on the Coinbase chart, which we're currently using. And if you look at all the other charts, then Bitcoin has moved a little bit, but on the Coinbase chart, it hasn't moved very much. And even across all exchanges, Bitcoin isn't even down by over 1% in the last 24 hours. We did see a little bit more volume this day. We saw Bitcoin have around $3.8 billion of volume, but a lot of that came from the movement that we saw yesterday, because part of the movement that we saw yesterday did in fact happen in the last 24 hours or so. We did see a little bit of that volume come in from where we saw Bitcoin kind of recovering from the little fall off that we saw in yesterday's video. But if we sort by change over the last 24 hours here, we're going to see that we have one double-digit gainer in Chainlink. BAT is doing pretty well. It was either last video or yesterday. It was either yesterday's video or the video before that. The basic attention token was the biggest loser. It was down by like 12%, or it was down by 9.43%, something like that. But now it's seen a little bit of a bounce here, as we can see on the 7-day price graphs. But if we sort by change over the last 24 hours and we scroll down here, we're going to see that the market isn't all that green. We see maybe 20, 25 green coins, period. But overall, we see that the market is mostly red. We do see one nearly double-digit loser in Revane. I'm not exactly sure how you pronounce that. I think it's Revane. We see it's down by almost 10%. In fact, the first recording of this was actually down by 10%. So it's been recovering a little bit here over the last hour or so. But overall, the markets are a little bit more red than they are green. But like it's been for the last several weeks now, it's not a very deep red. We definitely see some red. I mean, most of the top 10 is red. Almost all of the top 10, except for Monero, is in fact red. And Monero hasn't exactly been having a very good week, as you can see. But overall, the market just isn't seeing a lot of volatility. And that's really what we want to talk about today. When is that volatility going to be ending? Because like I said in the intro, I don't know about you guys, but the market's been kind of boring lately. I mean, the altcoins are doing stuff. I have trades going in the altcoin markets. The altcoin markets don't see as low volatility as Bitcoin does. They never do. That's a pretty generic trend that you see throughout the history of cryptocurrencies. But overall, Bitcoin especially has seen very low volatility. See how this number over here that represents the percent change over the last 24 hours for Bitcoin and the dollar value change over the last 24 hours is white? That's because that means that it hasn't moved at all. If that were green, that means that it would be a gain. And if it were red, that would mean that it was a loss. But since it's white, that means that it hasn't changed literally at all. Of course, we've seen a little bit of volatility, a little bit of fluctuations in that time period, but we're trading at exactly the same valuation, and that just kind of builds on the point that I'm making, that we're seeing very low volatility. So let's go ahead and break down why I think we're seeing very low volatility, and then we'll build into where I think this low volatility is going to be ending. One of the main reasons that we're seeing very low volatility is because, of course, we're in this accumulation phase that I've been talking about for several weeks now. You guys can browse the channel. I've been saying for a long time that we're in an accumulation phase, and I've also said for a very long time that I don't think it's going to end anytime soon. Let me go ahead and elaborate on that because I don't want any confusion here. I've said in many videos that I don't think this accumulation phase is going to end anytime soon unless we break this long-term descending triangle pattern. My position on this has evolved because I don't really see this downtrend of resistance as being all that important anymore since we've traded sideways out of it so many times. So I'm going to retract that statement saying that we're going to see a bullish breakout from that simply because we've traded straight sideways out of it and basically been invalidating this downtrend of resistance for the last several months. If you guys will remember, this downtrend of resistance was originally drawn something like that, and you can see that Bitcoin has very clearly traded straight sideways out of that. I'm not going to continue redrawing this downtrend because clearly the market isn't respecting that. So without the possibility of a bullish breakout above that, I really don't see a major bullish candlestick coming into the market over the next couple of weeks, especially since that downtrend is invalidated. And one of the main reasons that we've seen Bitcoin's volatility drop off in such a major way is, like I said, because we're at the tail end of a bear market. We're moving into an accumulation phase. Now, of course, the bear market may continue. Maybe we break below $6,000. Maybe volatility comes back in that way. Like I've said in many videos, I don't think that's going to happen. But one of the main reasons that we've seen volatility drop off so much is because we've come to the tail end of a bear market. Like I've said in a couple of other videos, and I believe I mentioned this in the course as well, what you see in the end of a bear market, or excuse me, at the end of a bull market is you see a bull market ends in a roar, and you see a bear market ends in a whimper. You see a bull market ends with a lot of volatility, a lot of exuberance, a lot of mainstream media attention, a lot of institutional interest actually. You see a lot of that come in at the beginning of the market, but a lot of it you also see come in at the end of the market. You see everybody talking about it. It becomes a big deal. You see a bull market end in exactly the way that you are expecting a bull market to end. But you see the exact opposite when a bear market ends. You see a bear market end in a whimper. You see a bear market end with decreasing volatility. You see a bear market end with decreasing volume. You see a bear market end with decreasing interest from the public and slightly increasing interest from the institutional investors, because these institutions are worth billions and billions of dollars for a reason, because they can see the next trend coming. So it's just because we're coming to the end of a bear market that we're seeing low volatility. That doesn't indicate an unhealthy market. In fact, I would say that this low volatility indicates a lot of health for the market. It indicates that the market is in fact very, very healthy indeed, because it means we're coming to the end of the bear market, and it means that a new bull market may be coming in the next 6 months or so. So what does this mean for us? When is this low volatility phase, this accumulation phase, going to end? Because like I've said, this is a rather boring market right now. I'm not gonna make two ways about it. It basically is a rather boring market right now, and it's something that I would like to see come to an end, because of course these massive rallies that we were seeing over here at the end of 2017 and at the beginning, and the major downtrends at the end of 2018, one, they were a little more exciting, but that's not really what's important. What's important is that you can make a lot more money in them, and that's of course what we're here trading cryptocurrency to do. And when you're seeing very low volatility, there's not a whole lot of valuation and profits to be made in the market. So let's go ahead and talk about when I think this is going to end. Well, since we're basically trading sideways, one of the main reasons that we're also trading sideways isn't just because we're coming to the end of a bear market. It's because the bulls and the bears are basically in a deadlock. I talked about this in a previous video as well. The bulls and the bears are basically in a deadlock where they can't get a leg up over each other. As you can see here, when we fell down, the bears got a little bit of they gained a little bit of ground here, and then a couple days later, the bulls took it right back, and we traded sideways. The bulls and the bears are perfectly evenly matched right now, and that's showing itself in the very low volatility. You can see we've kind of broken out of that 62, 66 trading range that we were in at the beginning of the video, but the bulls and the bears are very, very evenly matched. At the end of 2017, the bulls had the high ground. They had the high ground, Anakin. They had the high ground, and they were running straight towards the high ground up here to $20,000, and they were doing very, very well. If you were to say how strong the bulls were in comparison to how strong the bears were, perhaps you could say the bulls were twice as strong as the bears. And here in the beginning of the 2018 bear market up here at $20,000, that completely changed on its head. The bears all of a sudden were much, much stronger than the bulls were, and then that continued on for a little while. But now that we've come to the end of the bear market and we're entering an accumulation phase, then we get to the other thing that characterizes an accumulation phase. You see that the bulls and the bears are about the same strength. Because in a bear market, who's stronger? Well, the bears are stronger. In a bull market, who's stronger? Well, the bulls are stronger. It's in the name, but an accumulation phase doesn't have either of those names. You could call an accumulation phase the time in between a bull and a bear market, because the bulls and the bears are evenly matched. And that's important for what we're about to discuss, because why does that matter? Why does it matter that the bulls and the bears are evenly matched? Well, because for either the bear market to continue or for a new bull market to start, we need to see one of these factions gain the high ground, Anakin. They need to get the high ground. They need to actually be able to kick off a new rally, whether it be an uptrend or a downtrend. They need to be able to get the actual initiative back and start pushing the market in the direction that they see fit. And there are a couple of different ways that that can happen. One way that that can happen is fundamentally. We're going to be talking about that in a second. But another way that that can happen is technically. Of course, those are the two major ways that you analyze markets. And those are the two major ways that either the bulls or the bears can get the initiative back in this never-ending fight for which direction the market will be going. If they do it technically, here's a couple of different ways that the bulls or the bears could get the initiative back and start getting a lot of that volatility to come back, so this low volatility period will end. And really, one of the best ways for either faction to do that is breaking a level of support or resistance. One way the bears could do it is by breaking this uptrend of support right here, or breaking $6,000. Both of those are very important uptrends and levels of support, and if they were broken, the bears will get some of the initiative back, and we probably see another one of these blood falls where the bears all of a sudden would have a lot more power over the market, and they would be able to bring a lot more volatility back into the market, and that would be the end of this volatility. I don't think that's what's going to happen, though. I've talked about in many videos why I don't believe the bears are strong enough to break either one of these levels of support right now. But the same thing is true for the bulls right now as well. I want to make that very clear. It's not just that the bears are weak. The bulls are weak too, because they're very, very evenly matched, both of these factions. What's a way that the bulls could get the initiative back? Well, the way the bulls could get the initiative back is by breaking an important moving average of resistance, because all of our moving averages that are very important are above us right now. One way we could see the bulls start to get the initiative back is by breaking through this 100 daily simple moving average. We could get above $6,800, which is an important level of resistance. We could break the 200 daily simple moving average, or $7,400. You can break any kind of major level of resistance, and that would give the bulls some of the initiative back. But there's a problem with both of those scenarios, guys, and that is that we're in a very low volatility market. So how exactly are either of these factions going to break either one of these levels of support or resistance? They don't have the power to do it. Clearly, they can't move the market in either direction. The bears were able to move the market about $50 or $100 yesterday, and that was all they were able to accomplish. The bulls aren't going to be able to do a whole lot either. The bulls and the bears are very evenly matched, and they are not going to be able to, in the next little while, at least in my opinion, to break a major level of support or resistance simply because they're so evenly matched. So the technical ways that we can get out of this accumulation phase are either going to take a long time to build. We're going to see the volatility come back in a very gradual way, in a slow way, and it'll rebuild over the next couple of months on into the early part of 2019, or it's not going to be a technical breakout that is going to bring the volatility back. It's going to be a fundamental one, and that's why I wanted to hold off on talking about the fundamentals for this video. So let's go ahead and talk about the fundamentals. What is one way that we can bring volatility back? Well, like I said, you can bring it back with a technical breakout, or you can bring it back with a major fundamental news story. If we were to see the bears take control back from a major fundamental news story, what's an example of that we could see? We could see the Bitcoin ETF be denied by the U.S. Securities and Exchange Commission. We could see something bearish like that happen. You could see something extreme like Bitcoin, or the European Union, for example, bans Bitcoin. Or you could say that every single cryptocurrency and altcoin was deemed a security by the Securities and Exchange Commission. Think of any bearish scenario under the sun that has to do with fundamentals or news-related events, and that would get the bears strong enough to see them break a level of support and bring volatility back to the end, and in this accumulation phase, continuing on the bear market. That's one way you could see this happen. Another way you could see this happen, and what I think is more likely, is a bullish return of volatility due to fundamentals. We could either see something like backed launch coming here in December. We could see something like the SEC approving the VanEck and SolidX Bitcoin ETF. We could see something fundamental like another major institution stepping into the market in a very, very big way that makes a lot of headlines, and a lot of people that are trading Bitcoin realize it's a very big deal, and then Bitcoin gets enough bullish volume to come up here and break a technical level of resistance. A lot of what I'm trying to say here is that the volatility is not going to come back when Bitcoin does something on the technical chart. And that seems weird from a technical analyst. I understand that. That doesn't invalidate technical analysis. It just says that the technical analysis is still important until the fundamentals do something, but it's not going to be the technicals that bring the volatility back. You see the difference there? What I think we're going to have to do is, like I've said for a couple weeks now, that we're going to be trading sideways for the next couple of months until we see something like the Bitcoin ETF be approved, like we see backed launching, or like we see some other unknown, as of yet unknown, bullish story come out of the mainstream media, or out of the news media, or out of an institution, or out of a regulatory committee or body, etc., etc., etc. That's why I don't think we're going to see volatility coming back in the next couple of weeks, or even on into the next couple of months, but I do think it is going to be coming back, and I think it's going to be coming back in a big way in the early part of 2019. Because this underlying intrinsic value that Bitcoin has not gone anywhere. It's continued to go up. Guys, I've been harping on this for months, since the early part of the year, since we entered this bear market. I've been carrying the torch for the bulls in the cryptocurrency space by making one simple scenario, and by saying one simple thing, and that is that the Bitcoin intrinsic value, its underlying intrinsic value, the underlying intrinsic value of Bitcoin, what Bitcoin is actually worth, not regulated to the markets, not relegated to the markets, I should say, not based on its dollar value, but what Bitcoin is worth in the insofar as how it can be used by the people, how it can be used by developing nations, how the cryptocurrency and blockchain ecosystem in general can be used by the world, etc., 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 has become much, much stronger. We've seen a lot of fundamentals continue to improve here in the 2018 bear market, even though the price action has been going down. We've seen price action going down. We've seen P go down as I goes up. And what does that mean? That means that we are undervalued right now. That means that this gap right here in between the price action and the underlying intrinsic value of Bitcoin, cryptocurrencies, and the blockchain ecosystem is going to be filled sometime. And we're going to see that filled probably in 2019. And what's going to kick off this little refillment of the underlying intrinsic value of this space is going to, in my opinion, be some kind of major bullish fundamental catalyst coming here in the later part of 2018, on into the end of 2018, or on into the beginning of 2019. I'm not going to say it's going to happen within the next 6 months. Well, I don't think it's going to happen in the next couple of months. I do think it's going to happen probably sometime in the next 6 months, but we're going to see some kind of major news story, be it backed, be it the VanEck, SolidX, Bitcoin ETF, etc. It could be anything, but we're going to see some kind of bullish catalyst come out that is going to see Bitcoin break an important level of resistance and kick off a new bull market starting in the next 6 months, maybe a bit longer, but probably within the next 6 months. Tell me in the comments section down below what you think of that analysis. I'll go ahead and wrap it up really quickly here. We're not going to see the volatility come back in the big way in a little while. We're going to see it continue trading sideways for another couple of weeks. I don't expect to see another major breakout or another major rally or downtrend coming in the next couple of weeks. I think the volatility is mostly tapered off because the bulls and the bears are equally matched right now. But let me go ahead and end the video with this. Guys, even though the volatility is very low right now, even though the market may be very, very boring right now, even though you guys may be getting disenfranchised with the market right now, whatever the problem you may have with the market right now, maybe you've lost a lot of money from the $20,000 high, maybe you guys have been holding bags for a long time and just want to finally be able to let go of them and get your money back. Whatever the problem you guys may be facing in the market right now, just remember this. The chart I just drew right here has proven itself time and time again in the cryptocurrency market. Bitcoin at one point ran to $1,250 odd over here in 2013. And when it did, it started a new bear market, and everybody thought the space was dead. Bitcoin was nowhere near dead. Bitcoin had not even started the major rally that it would see just a couple of years later. If you're holding bags and you've already lost 80%, I can't personally, for a moral and for a legal reason, tell you what to do with those bags, but you guys know what the right thing to do is. You guys know how to operate in this market. Don't let your emotions take control of you. Realize that we're on the ground floor of a space that is going to revolutionize global finance and revolutionize the world of payments, and etc., etc., etc. You guys understand how important this is. I don't need to drill it into your heads again. Right now, when Bitcoin is trading sideways, and while we're seeing Bitcoin not do a whole lot, is a great time to be building a portfolio for the long term, for the next 3 years, the next 5 years, the next 10 years, your retirement fund, whatever it may be. Now is the time to be getting into a growing market, because when you see a bull market starting, it's already too late. You should have been investing before then. I hope you guys enjoyed this video. If you did, definitely consider dropping a like, hitting that subscribe button, and smashing the notification bell, guys. If you want to learn how to do technical analysis, you can do so by clicking the link in the description and go look at what we have to offer in the Cryptocurrency Technical Analysis Academy. If you have any questions about what I talked about here today, or if you have any comments about the scenario that I've laid out, or you just want to chat, definitely consider dropping a comment. I read every single comment, and I will try to respond to as many as I can. Also, if you're interested in talking to me or the amazing community, you can join the Discord server with the link in the description down below. I do want to thank each and every single one of you for watching as always, and I will see you guys in the next video. Peace.